Hello and welcome to Switzer Investing Insights, brought to you by nabtrade. And today we want to talk about CBA's new PERLS XII hybrid issue. Paul, give us an update on hybrids.
Yeah, before I get to the actual issue, just a quick recap on a hybrid security. It is a cross between a capital and debt-like security, so it counts as capital for the bank. It's not a deposit, but the debt-like features, it does pay a distribution. That's at a fixed margin over the benchmark interest rate, which in this case is the 90-day bank bill rate. Usually that's fully franked. The distribution is reset each quarter, Peter. Look, while it's perpetual and has no term, the expectation is that the security will be redeemed for the initial $100 you invest, and it's classified as Tier 1 capital for the bank's purposes.
Okay, so let's talk about the PERLS note in particular.
Yeah, look, it's a $100 note. It's an unsecured subordinated note issued by the Commonwealth Bank. Gross distribution of 3% over the 90-day bank bill rate. An issue size of at least $1.25 billion. It will trade on the ASX under the stock code CBA PI. Has a mandatory exchange into CBA shares in about 9.5 years' time, 20th of April 2029. But also CBA can call the issue and give you the $100 back. That's probably the expectation. That would happen in 7.5 years' time. But there are these non-viability and capital trigger events that can cause automatic exchange into CBA ordinary shares. So you need to understand that example.
Okay, let's go to the next important point. Explain the example piece by piece, Paul.
Yeah, let's go to work out the distribution. I said it's set over the 90-day bank bill rate. That's a sort of a key benchmark interest rate. Let's assume the 90-day bank bill rate at the moment is about 0.85%.
Yep.
That means the gross distribution, Peter, is going to be the margin of 3% plus the bank bill rate, giving you a total of 3.85%.
Yep.
Now, it is going to be fully franked. That's one of the great advantages of these hybrid securities, but they are adjusted for the benefit of the franking credit. So the actual cash distribution is actually multiplied by 0.7 to mean that the cash distribution in this case will be 2.7%, but that will be fully franked. So that's going to be attractive.
That's what they're getting cash, the rest will come in their tax return.
Yep, and then that's going to be attractive to particularly low rate taxpayers.
Yep.
If bank bill rates, so this is done each quarter, so let's move a quarter ahead and let's assume the bank bill rate has increased because market thinks interest rates might be on the way up a little bit to 1%. That means the gross distribution rate for the following quarter would be 4%.
Yep.
But if the market thinks interest rates are going down or the RBA's cut rates and the bank bill rate has fallen to say 0.5%, the gross distribution for that quarter would then be 3.5%.
So a better economy, better return. So how does all this stack up?
Yeah, look, it's set at a margin at 3%. On the screen in front of you can see PERLS issues over the last 6 years, and you can see the fixed margin has varied from a high of 5.2% down to 2.8%. This is at the bottom end of the range. It's a slightly longer security, but things have changed a bit in the hybrid securities markets. First of all, because we had a big scare over franking credits last year, which impacted the hybrid market. Secondly, there's just not a lot of alternatives around for investors to consider. And thirdly, perhaps most importantly, bank capital ratios have really improved. This is sort of the level up. So banks actually have a much stronger balance sheet. So the chances of actually the bank having to say do one of these non-viability triggers has reduced.
It
so
makes hybrids relatively more secure.
Yeah, relatively more secure, that's right.
Okay, so let's look at the important dates.
Yeah, the offer closes, I should say, on the 8th of November. ASX is listing, as I said, so you'll be able to, if you don't like the investment, it will be tradable, and so you will be able to trade it from the 15th of November on the ASX.
You can get out if you have to.
If you have to, right? Minimum application of $5,000, that's 50 PERLS, and then the multiples of 10 PERLS. They're both broker firm and security holder offers. That means lots of brokers will have stock available, but also the security holder offer is available to anyone who owns CBA ordinary shares or is an investor in the PERLS 7, 8, 9, 10 and 11 issues.
Okay, Paul, so let's have the risks as well.
Yeah, look, like any investment, really important to understand the risk. This is not a bank deposit, Peter.
No.
There is no government guarantee, right?
Yep.
And if
CBA higher return.
Yep, and if CBA gets into serious trouble or there's an Australian banking crisis, investors could lose some or all of your capital. In particular, if one of these trigger events is triggered and there's an automatic exchange into CBA shares, the maximum number of CBA shares you'll get back is capped. And that could be worth a lot less than the $100 per note. So look, you need to go into this with your eyes wide open. And finally, distributions. Look, there's no requirement for CBA actually to pay a distribution. They're not cumulative, and if they're not paid, they won't subsequently be paid. So there is a risk around these things, and you shouldn't underestimate that.
Okay, so do you think this issue will go well?
Look, I think there's going to be a lot of demand for this, Peter, simply because of the margin and the demand for these type of securities. There hasn't been any other big offer hit the hybrid market for some time. So it will be really well supported, but importantly, before investing, always important to read the prospectus first.
Yep.
And if you don't understand hybrids, don't invest. You want to learn out more, things like ASIC through their Money Smart website. That's a government-run website. Has some really good information on understanding the basics of hybrid securities.
Okay, so that's Switzer Investing Insights brought to you by nabtrade. Thanks for joining us.